turn it over to Jim, and he will finish the evening. So that's the layout for tonight. Tomorrow we will discuss the TDI, putting it all together, how to scale in with TDI, and okay. Dave, I've been saying that since you met me, man. Nothing different. Anyway, everything's good. Hope everyone's enjoying the class. I am having a great time. Good stuff. Okay, I was going to cover that tomorrow. That's the rules for the safety trade. Okay, good stuff, good stuff. All right, George, thanks, man. Kelly, thank you. All right, so let's talk about, oh, wait a minute, I had some other stuff for you. I had this. This was cool. All right, pop quiz. All right. All right, identify everything on this chart, and just like a quick one. Like, I won't do 5 minutes. Identify everything on this chart starting now and take about 3 minutes. Go. No, we're quizzing on this chart. Another minute. You should take a picture of this, mark it up, or just make mental notes of everything, and I'm going to go over it. We're taking like a quick quiz. Yeah, I know there's internet issues, so if you come in and it's quiet, you get nervous and think you lost your connection. I feel like my connection has been lost since I started. It is so weird sitting in my office staring at the screen and talking to myself, like screaming loud. It's just weird, man. You guys, you can't imagine how weird it is. But I love it. All right, I'm ruining the quiz. By the way, I never go to the library because I can't be quiet. All right, as soon as you're done, pop a D up there, and then I'll know how many people are finished. Okay, I'm waiting for most of the new people to be done. I saw Alan. Okay. All right, enough are done. All right, so let's walk through it together. All right, there's my last new guy. Okay. Grab a pen. I don't know what color it's going to be, so don't give me a hard time, all right? Do you guys get this? False move, weak beginning, vector to the low, pull back, peak formation, right? Peak formation, low. Okay, then what do you got? let's see, stalls here at the averages, maybe 1, 2, maybe that's an extra level. Let's just say 3 pushes, right, into level 1 consolidation. A beautiful safety trade comes out. Second leg, railroad tracks, bam, got you. All right, only 2 levels of rise in here into consolidation. The next night, stop, hunt, low, rise to the top. The dealer puts on the brakes, railroad tracks. You got, that's kind of a big candle. You might not get an entry there. Maybe you got an entry here, back down to here, ends in consolidation, right? That's what you should have had. That's how you should have labeled it. If you did, great. If not, that's all right. There's still time. Now, how would I trade the big W? Okay, you got to push down, second leg. Depending on the timings, I took the templates off, but maybe the collapse inside the mustard or above the mustard. But if I was really trading it, you know I got in right there, and I got out right here. All right, man. Busting chops. Exit signal is your take profit of 50 or this 3 top side right here. If you're not out, remember the dealer will give you 2 opportunities to book your profit and then pull the zone away from you. He gives you a third opportunity, but it's much lower than your previous opportunities. The dealer will give you 2 chances to book a profit, sometimes 3, but as a general rule, the dealer will give you 2 chances to book a profit and then pull it away from you. You understand? Now, you label this chart, but something sneaky about it, why I took everything off of it, was this. This is a weekly chart of Australian USD weekly. Australian. See that? A weekly, not a daily, not a 4-hour, a weekly. Isn't that crazy? Let me scroll down to the bottom so you can see how long all this took. Look, you could have had your peak formation low on October 12th of 2008, and you would have had a safety trade in the summer around August 15th, 2010. It took you 2 years to get a safety trade. Okay? And then you had a slow rise in I don't know, May, March. Let me see you pull that down. End of March going into April, you had your stop hunt low rise, and then you had your trap move to the high in September of 2011. Okay? Safety right to the Mayo too. Isn't that pretty? It's amazing, isn't it? To me it is. I don't know. If that's not amazing to you, maybe you're in the wrong class. That is absolutely amazing to me. It took years for the same cycle to develop. Right? It's amazing. This is, all right, we have Mona, Winona. What's another country girl name that could be Elisa? This would be her third sister. Somebody. Fiona. That's a good one. Mona, Winona, and Fiona Lisa. This is the third sister. All right. I'm getting loopy, man. It's getting be that time. I think that sinus medication is kicking in. All right, man. Seriously though, all kidding aside, this is a weekly chart of Australian, and damn if the same false move and the same W formation, trap low, pull away, everything, it's in there. Crazy. All right. I hope did you guys get a picture of that? Okay, that was a good one. How many pips was that? It started at 58.93 and it was 1038. So what is that? 500 times 10 would be like 5,000 pips. Okay, don't want to save it. Did you guys get a picture of that? There it is right there. If you want to snag it, snag it. I'll leave it up for a second, okay? Going once, going twice, 4,000, thanks. Going twice, going once, going twice, sold. No more picture. All right. That was Australian USD going back 4 or 5 years. Okay? Winona Lisa. You're asking me the names. I'm joking. I said, like, we have Mona Lisa, Winona Lisa, Fiona Lisa, the three sisters. The daily 15-minute, 4-hour yearly charts. All right, you ready? Yeah, right. Let me get back on track here. Okay, we're going to talk about candlesticks and the structures. We're going to look at some of the charts, and we'll look at probably about 20 patterns that occur over and over that signal the indication of the reversal. All right, but let's put it in theory on paper, and then we'll look at some charts. All right, identify the market condition. Candles in the wrong condition are meaningless. What does that mean? Well, if you get the peak formation low or high, and it goes up, and then the dealers throw hammers in the middle of the range, it doesn't mean anything. It's just there to scare you. Usually when the dealers throw those other patterns in the middle of the range, it's to hit the stops and to scare people out of the trade. And why do they do it? Because we know it works. So the only patterns that you're concerned about are here and here. And that's it. This other garbage in the middle is garbage. If he throws her hammer right there, you better not get out. That's a horrible hammer. It looks like maybe a broom. All right, maybe we should make that. All right, if the dealer throws a hammer in the middle of the range, it's crap. Don't worry about it. Don't let him scare you out. Okay? So what do you have? Types of candles we're going to look at. These are man-made by the dealer, by the way. But I want you to understand something very important. The dealer doesn't come to the table and go, I am going to throw a hammer for Javon. I'm going to do a spinning top, quasi railroad tracky pattern for Lenny. And then when Murray's not looking, I'm going to throw 2 pins to the mayonnaise. That's not what is happening here. What's happening is the dealer is going to get the money, and in his wake, these candles print. But if we understand now that the printing of these candles is the footprint the dealer leaves behind in the chart, the clue to identify where he is in the cycle, then we're on to something big. Because now we can identify the peak formations by the behavior and what the candles look like. The outside structures, the pins to the mayonnaise, the things that the dealer makes. We can put a label on these things at certain times of the day between 1 and 4 a.m. and between 8 and 10 a.m. New York time. We can identify that. If the dealer does this after 3 levels of rise and throws 2 pins to the top side of a set of railroad tracks, we got them. So the candles we're looking for are spike candles, spinning tops, which are those small squash down candles with a pin on top and the bottom. Doji type of candles, right? Hammers, railroad tracks, a high test candle, low test candle. That has nothing to do with gasoline or avionic fuel. What that is aviation fuel. When the dealer comes back to test the high of on the second leg or test the low with the second leg, that candle is telling by how it closes. If it violates the low and comes back above and ends on a hammer, that would be the low test candle that closed as a hammer. The high test candle that closed as a hammer. Okay, those are the clues that the dealer is working it, baby, and he's in that area. Okay? Vector candles. The definition of vector is magnitude, length, and direction. What does it look like? It looks like a burst in price out of nowhere. That's where the traders get the concept of breakout trading. When a vector candle comes above or below the Asian numbers, people trade that as a break. What it looks like to you, remember keeping the big board in mind, it's essentially a burst in price, either up or down. Traders call it, it's been like one of the inside jokes. They call it a momentum candle. There's no momentum there because if you understand how the dealer does it, the joke's on the retail trader. A momentum candle is a flash of equity, a small amount of money, just enough to get the ball rolling or started. They don't use any more money than they have to get the ball rolling and get traders to bite. So if the dealer has an open book of $700 million and he can get a pair to move off of $100 million, he will flash the $100 million into that pair, leaving his $600 in reserve, and it will create the activity or the appearance of a momentum candle. The real momentum in Forex is the slow, steady decline in price or the slow, steady rise in price that comes after all the craziness and the market settles down. That's real momentum. The dealer is all in. The balance of his book, his $600 million, is committed to the trade. Okay? Momentum candle, a flash, a spike, that's not a momentum candle. The breakout candle, it's not a momentum candle. They couldn't be more wrong. What a vector candle is, it's an anomaly on the chart. It looks like a breakout, but it really is the beginning of possibly the first leg for the M formation, first leg for the W formation, the first leg for the outside structure, half a Batman. The thing about this candle is that it appears for no reason other than to get things going. So the price is in consolidation since 5 p.m. New York time and trade sideways. And then all of a sudden, at 3:30 in the morning or 3:45, the dealer breaks out of that range with a burst in price, momentum candle. The reality is it's a vector. He vectors to the high or vectors to the low, and he gets the party started, so to speak. Right? False move, session beginning, the vector comes in. This is what it looks like on the chart. Ah, you lost sound. Sorry. Okay. When did I'll just go back over it. No worries. Sorry. I don't know why it went out. Okay, so here we go. I don't know what you heard, so I'll just start over. There's a line, Asian low. The vector candle is magnitude and size down towards the low. Okay? He hits it again, too, the second push. The third push, remember, this was solid red at the onset and stayed down there and then reversed out and closed high. The dealer closed above the low after it was set. Right here, he pushed below and came back above aggressively and then tapped it for a third time. Okay, he worked the region in here. These are vector. Okay, vector to the top side. The dealer violates the Asian number, possibly within the same candle. Remember, it's a burst in price. He goes, bam, pulls back, bam, hits it again. That's your tool pulsations. And then he hits it one more time for a third time, pulls off that number into consolidation, and vectors to the high again, slightly breaks, and then pulls right back below within 30 minutes. It's over. Okay, vector to the high, vector to the low. Okay, a violation is a break above or below an area. Okay, so if this is the high, an imaginary line is drawn, right? Here's a break, but he closes right below or right around. Now you have to analyze what you got. Okay, you wait. He may, depending on how crooked my wrist is, he may or may not have closed above. I can't draw a straight line, okay, with the mouse. So then what do? You have your high, you wait. He closes right back below aggressively. This is the M formation, and TDI will help you decide that. Okay? And if you wait a few more bars, it's okay. All right? Remember, this pattern takes time. The high is established. 1, 2, 3, 4, 5. High test candle, vectors to the high. 6, 7, 8. 2 hours he worked this area to get what he needed. And because he was above the Asian numbers and above in an uptrend from all these averages, people took this long. Okay? That's what vector is. It's size and magnitude out of nowhere. Everything's meandering along nice and calmly. And then what? Bam, bam, bam to the high, okay? That's what you're looking for. That's vector. How did that slide get there? All right, I don't know what's going on, but I think I had 2 instances running. I'm having technical difficulties today. Please stand by. All right. Okay, so certain formations that appear at the right time and distance, vectors, give us high probability setups. Picture the drawing I made for you with how the dealer sets the high and low. I showed the example where he goes from 61, 60, 85, right? Picture that in your mind. Okay, so when the candles appear, he's changing the numbers. He's changing the numbers and pulling back. He's staying 15 to 20 pips off of the low, right? Then he comes near the low again, but doesn't break it. Then he railroad tracks off of that. Remember I told you the entry would be about 15 pips off of the low plus a slippage in the spread, another 5. Your entry is going to be somewhere in here. And then he shifts the zone immediately and starts his run. Hit the stops, rise. Look, that's a reversal doji right there, isn't it? But it's already off of the peak. We don't care about this crap in here. It's garbage. This stuff fakes you out. It's by design. It's on purpose. It messes with you. Okay? You're looking for hammer to the mayonnaise, railroad tracks to the mayonnaise, around between 2 and 4 a.m. Clock coming out of the box, 2:30, false move session ending, right? So look. I'm trying to find the board so I can erase the drawings. Here we go. Okay, look. Session changeover right here. False move session ending, pulls back. The new dealer comes on, false move session beginning, gotcha. He had everybody that fall for the false move right down to the mayonnaise, close below, spiked below and turned the candle inside out to end the session and reverse back. These are the things you have to understand that's going on. The low test candle is the candle that comes in and does not violate or break the low. It retests it, so to speak. Okay? Putting it together. Shift up. 3 to the high. 1, 2, 3 to the high. Ends on a hammer. Pulls back. How long did this go on? The high is set on this candle. 1, 2, 3. The dealer shifts the zone in 1 hour on the 4th bar and closes inside the ketchup and the mustard. Spikes back out, hit the stops, and there's a major shift change right there. There is a major shift of the zone. And there is your M formation, multiple hammers and tops. Look at them again. Hammer, hammer, quasi-hammer, right? Spinning toppy because there's a little wick on there. If there was no wick, that'd be a perfect hammer. See it? These patterns at outside the blue box, 25 to 50 pips higher, at 3 o'clock in the morning when this starts, leading over to the new session by 4 a.m., working it for 1, 2, 3, 4, an hour from 3 to 4. Okay, then you anticipate the shifting of the zone. He works a little more, and then there's the major shift. There's the panic candle, the panic bar that everybody gets freaked out over if they're going the wrong way. That's the bar that puts everybody in trouble and us in profit. When that shifting of the zone comes for us, it is a sigh of relief that you've got the right directional move today and you can just relax. And that should come within a reasonable amount of time of your entry. If you entered on the second handle, the trade was profitable within. If you entered here, which is a good quality entry on this setup, the high test candle comes back, goes up solid green, closes as a hammer. You entered right there. Your trade went in profit in 1 bar. And then it meandered around and went up big by the second and third push to the low. You might even went limit. How do I know? Because this is a 60 pip range. You entered about 20 pips above. This move from here to here is probably about 50 pips or so. So you're out. When everybody else is still trying to figure out what the hell the direction is, you're done. I can't tell you the feeling the first time you ever bag a trade that has no drawdown in it. It's absolutely amazing. You have to like blink your eyes and make sure you got it right. Like, is this a joke? Is something wrong? You grab a hammer, and remember I told you right when the hammer is issued, the next bar or two is usually a shift bar, some type of shift bar. When the dealer issues a doji or a hammer on the second leg, the next bar is usually a shift. So if you grab that bar at the close, right, if you grab that shift bar right when it closes and place your order at the open, within 15, 20 minutes, 15 minutes plus the first couple minutes of the next bar, you're in profit already. And it's absolutely crazy. You have to blink your eyes in amazement and can't believe, like, wow, did that just happen? And it's crazy because you get used to it, and then every time you get a little drawdown, you're like, what is that, a bad trade? It's crazy. Can't wait for you guys to feel it. All right, look. Variations on the theme. Here's the break. Small little tap, 2, 3 to the high, 1 big vector candle, then taps it again, pulls back, hammer, hammer, shift the zone. This is the high test candle. All right, pins to the downside. When the pins become unidirectional in the direction of the trap, you understand what's going on. Why? What happens? In the range, pins will be top and bottom, right? Inside the range, pins will be top and bottom. But when the dealer is trying to snag, the pins become extended in a unidirectional fashion to the side of the trap. Where the low of the day is forming, the pins will be pushed to the downside. When the high of the day is forming, the pins will be pushed to the top side. So remember, you have W formation, rise, hit the stops, which is both bidirectional pins. Rise, hit the stops, rise, bidirectional pins. On level 3 and level 1, or peak formation and level 3, the pins will be unidirectional in scope, pointing in the direction of the trap. Very important to understand that. The pins will be pointed in the direction of the trap. The railroad tracks will be reaching down in the direction of the trap. Okay, railroad tracks. 1, 2, 3 to the low, an aggressive move to the downside, and a pullback away from that. Okay, comes back, second leg, pins to the downside, and then away. Evening star formation. This is my favorite setup. This right here, not my favorite setup, my favorite definition of what the dealer's doing. If you read a textbook, oh, I gotta take a sip. If you read a textbook, the book says there's indecision in the market. There's a fight between the Bulls and the Bears, and they're duking it out. And may the best man win. I know you've heard that garbage. The evening star and morning star formation are an extra 15 minutes for the dealer to take your money. That's all it is. Imagine a railroad track setting where the dealer goes in and comes right back out. Now, those are 2 parallel candles side by side as if to form a set of railroad tracks. Right? If you've never seen it before, can't imagine it's like this. Choo-choo. Look, there's the railroad ties. That's a set of railroad tracks where I come from. Okay? We do have a lot of derailments in Florida because they're not very good tracks, but there they are. Look, that's what a set of railroad tracks is. It's 15 in and 15 out. So what happens is the dealer gets excited and decide around for 15 more minutes because people are piling on like crazy long. So he's like, why would I leave? I'm racking in $50 million a second here. Let me hang out. So he stays in that formation by not breaking or violating the high and allows the volume to pour into his book, and then he corrects off that number. I assure you, there is no indecision in that candle. They know exactly where they are going and what they are doing. Okay? There's no like, oh, I'm not really sure. Maybe I'll hang around for a while and see if anybody bites. They're biting or they wouldn't stay. If in absentia of this candle is a railroad track up and down. Right? He breaks in here. This is not a railroad track. A railroad track is up and down. Two parallel bars, about 15 pips or greater in length. They need to be equal with the exception of maybe a wick. Maybe a wick right here. Does one candle need to be inside or outside, like an outside structure inside? No. Because I don't know when the dealer runs up here if he pin the top and pull back, or if he's fade off of that and leave and open and go straight down and pin on the bottom side. I don't know. But railroad tracks are basically like in Canadian, Australian, 15, 20 pips. Pound yen, 35 pips, 30 pips. The volumes have been lighter, so the railroad tracks have been smaller. But as a general rule, the more aggressive the cross, the bigger the candlesticks will be on a railroad track, which will be about 25, 30, 35 pips. I've seen 50, 60 pip railroad tracks before in GBP CHF. Just a big spike to the low and a pull right back up. Okay? Evening star formation. Just understand what's going on. Absolutely. Does the Mayo have significance? Yes. The dealer's faking above the mayonnaise, closing above, and holding above that level. Right? So think about this for a minute. What did he do? He has his Asian consolidation. The dealer vectors out of nowhere above the mayonnaise. Being above the mayonnaise induces people to go long. Why? Because this is the 200 EMA. Wow, that was horrible. I got erased it. I can't even stand it myself. And I drew it. Okay, look. The 200 EMA is the 1 hour chart. So a break above the 200 is an entry system. A break plus a close above the 200 is an entry. The dealer hangs around for 15 minutes, and then he said, I was just kidding, and in 30 minutes you're down big or out, depending on where you put your stop, right? Some people put their stop right below the 200 inside this body because they break it into 3 5-minute pieces, and the dealer says, so what? And he takes everybody out. So yes, very important, 200 EMA, all right? Railroad tracks, here they are. Pin to the top side, and then this one is smaller. This is an outside bar technically, but what you have is a trade above, railroad tracks to the high, and a pull back, and then a correction. All right, a doji. Here's the definitions of these candles. An HOD or LOD is held for an additional 15 minutes. So if the doji is issued between candles, all it is 15 more minutes of money, baby. And if you were making money at 10 million a second or 10 million a minute, wouldn't you hang around for 15 of those minutes? I would. It's the business. So the dealer adds a small squat type doji candle, whatever you want to call it, a small tight little candle to hold the level and make traders pour the orders into his book. So the doji, by definition, is the high of the day or low of the day is held for an additional 15 minutes that allows the dealer to flash across or grab a few more contracts while he's hanging around. And when I say flash across, he'll hold the low in euro, and then he'll work euro odd or euro GBP. And he does that by holding at that level with the doji type candle. That's what the footprint is on the chart, the remnant. Evening morning star, hold the level, open the spread, induce traders to take continuation trades. All right? Hammers and inverted hammers. used to activate pending orders and trigger the stops. Okay, think about it. A hammer goes up, it stays, opens the spread, picks up the pendings, sucks those orders back in, and ends as a hammer. Picture it. This is the candle when it's working, and then it ends like this. All right? That's how this candle closes. What did he do? He went up there, he grabbed it, and he ended as a hammer. I would say the minimum pip size should be about 15 pips. But you're going to see milder railroad tracks in Euro GBP, less volume, Australian USD, Canadian, pairs that are known to trade more calm and less range. Big aggressive candle railroad tracks will come in GBP CHF, pound yen, EJ, euro yen, those kind of pairs, okay? Spike tops, spike bottoms to trap and create excessive drawdown quickly. Okay? Shame on you, Gloria. All right? Spike tops is also triggered by news releases. They're vector candles. They're just huge candles out of nowhere. What they do is they trap and create drawdown. How many times have you seen a candle go like this straight up and paint green, and then everyone you know was like, oh man, I saw that spike and I jumped on, and then within 15, 20 minutes it's back down here where it started. Okay? All right. Railroad tracks. Get in, grab the money, create immediate drawdown and panic, and get out. That's this example. Okay? This being green and this being red. They go in quickly, grab all the money, and come right back out. It's almost like a bank robbery. Railroad tracks are a bank robbery. They go in, grab the money, and they go right back out. And the whole thing takes 30 minutes in, 15 out. Okay, so market makers induce traders to take the wrong directional move by sharp, aggressive price changes at or near the high and low of the day. These patterns, which is a collection of these types of candles, will always reveal a reversal setup. Why would the pattern fail? Man, that looks like a perfect M, Steve, but they went higher. Man, I could have swore I had a perfect half a Batman to the downside, outside structure, and what happened? Well, it would fail because the trap volume, the number that they were seeking, does not total the value that they were after. So if they were seeking 700 million in order to get a balance, and they only got 550, then that ain't right, man. He's not going to move the market when he was ordered to get 700 and he only got 550. They're going to tell him, look, man, if you can't get the extra 150 million or whatever, you're fired. So if he has his instructions from upstairs, they tell him, I need you to hit the stops on euro to the downside. I need you to grab 700 plus million in open and float short, and then you can rise off of that number. Okay, well, 550 ain't going to cut it. So what does he do? An extended stop hunt will be seen. But here's the beauty. If the numbers are weak, the dealer will hold the level, and that is where the 2-hour time cap that I told you about in the first day of class comes into play. If the dealer goes down to a level and creates an outside structure or a pattern, if he goes down, creates an outside structure, and comes over here and goes into consolidation, and doesn't move off of that level for more than 2 hours, right? Remember I told you? They'll work the area 30 to 90 minutes up to 2 hours. If it goes past the 2-hour time limit and you have not seen a profit, the dealer's book is off. Something isn't right. The money he was seeking is not there. And that's why a W would fail down to the next level to grab and induce. It's kind of like this. The dealer comes on duty. He's told, I need 700 million down here. All right, I'm going to call it 7HM. Left to right. No, it doesn't look like it, but just trust me, it's 700 million, right? He comes in and he pulls back and evaluates, and he only brought 5 in. So what does he say? All right, I need to violate the low. People don't believe short. They're not seeing short. Oh yeah, I'll show you short. He breaks the low and pushes down another 25 to 50 pips below the previous low that was established, and he induces traders to pile on. And as he's moving down lower, he's inducing more short selling. So now people believe, man, the direction was down. I should have took it. And the extra balance to his book is acquired. Then he will make the formation and rise off of that number back into the range and above the previous low to create what he's looking for, or to gather up what he's looking for. All right? It'll come, Chris. Don't worry. All right. So when trap volume is not met, the market maker has two moves left. And here's the two moves that he's got. He can hit the stops 25 to 50 pips higher or lower, or he can just hold the level and handle the cross. Okay, remember that Australian chart we marked up on the first day where the dealer went up to the high and just sat there like this all night into the U.S. session and never broke the high and then he corrected? I gave you that as homework on the first day. Do you remember? Okay, well, that is the example of the dealer holding the level and hopping off that pair and working on something else. He has limited equity. He can only handle 4 or 5 pairs at a time. So the dealer will rise Australian USD to the high of the day. His book is not what he wanted, so he'll go, you know what, I'll leave Australian at the high for X amount of hours, for 6 hours, and I'll leave it there. And in the meantime, while it's sitting up above the averages and above the Asian numbers and at the high of the day, people will be buying into that. So if it takes me 2, 3, 4 hours to balance my book, I can hop over here to Euro Australian and I can make a move in that pair. While I'll move Euro, hold Australian, creates a disparity in Euro odd, I can work that cross, make money in Euro odd, make money in Euro, and when I come back to Australian in the U.S. session, I pass it off to my brethren on the next session, and he will correct that pair because the book will be met on Australian. So you see, it's not just, oh, the dealer's sitting here minding his own business and providing a spread and a service for me. It's a big, big, huge orchestrated dance against the traders, simultaneously working some pairs, holding some majors, moving some crosses, making disparity in the fractions to create the panic and the move, balancing his book along the way, hitting the stops, booking a profit, and coming back to a pair later, and constantly turning it over. Okay? The beauty of this is that these moves are carried out over time interval, and they induce traders to take a position when they fail to take it. But we can read these moves and understand that there's an opportunity for us to exploit that, because holding Australia near the high and moving Euro and Euro odd gives us a tip of which way that pair is going to go in several hours, several minutes. We can be ahead of these guys on these setups. And these are the clues. By holding a collection of consolidated candles off of an outside structure, we can grab them. Okay? If you are caught by a move and you get stopped out, you have to wait for the next level rise or fall, which takes a minimum of 2 hours. And if it's close to the session changeover, you need to wait for the changeover, because at 9:30 he might hit the stops. Back to that Australian chart. Dealer came out of the box. He rose to the high and stayed at the high. Okay? He got close to the changeover, and then he went mildly, hit the stops high, and corrected. This extended accumulation phase, that started mid-London and did not complete until after the 9:45 candle in the U.S. session, was part of this stuff. So if the move is against you, you need to wait a minimum of 2 hours. If nothing shows in 2 hours, then you wait and you start getting 8 o'clock, 8:30. You know what? Let me scratch out of this, because the bastard's liable to hit the stops and take me out and then correct anyway. And I can grab a better position of a higher level short seller, which is always a better open. And I can bag my pips when he comes to the Asian range and be done for the day, instead of waiting for the major correction. Okay? These are the things you should see in the candles. All right? Here's the trap candle patterns. Okay? We call this a half a Batman. This is an outside structure. This is an outside structure to the high. Why? Because the high has been set. The side of this area has been cleared by the dealer, and he does not want to go back there. So he is outside to the high, and then he trades off of that. The outside structure forms a half a Batman. Use your imagination. Batman, there's his mask, right? Half a Batman. It's just an outside structure. Your vector candles to the high. 1, 2, 3 to the high. Half a Batman flat. You expect price to roll out of there. Look how long this goes on. The high is established. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10, 11 candles. All right, how long is that? 2.5, 3 hours. Remember, 2-hour time limit. If the 2-hour time limit is exceeded, you need to bail on the trade. Okay? Because we don't know. The dealer's book is not balanced. And what happens is after 2 hours, if no movement is seen, it becomes a 50-50 proposition. I am not in the 50-50 business, and neither are you starting today. You are not in the I'll take a 50-50 shot with good money management bullshit business that they try to sell to you and tell you is the right way to trade. Oh, if you can hit 50% of your trades and hit 3-to-1 risk to reward, you will be profitable. Yeah, good luck. Send me your statement. I want to see it. Okay? So, half a Batman to the high, half a Batman to the low. All right? Just use your imagination. All right. Outside structure to the low. Here's the actual move without my little stupid drawing on there. Notice something very important. Light blue tracer, baby. Dealer vectors above the tracer, pulls back and stays in an outside to the high, outside bar to the high, and has cleared the top side of the board and does not penetrate that area again. Outside to the high. Okay, outside to the low. The dealer comes out of the consolidation. 1, 2. There's your little ping to the bottom side. The dealer has cleared the board below this level and stays outside. Can be 2 candles. Outside structure to the low. 3 to the low, outside structure. The dealer does not offer a second leg in and out. He does not offer a full clean W. All right? Pins to the top above the blue tracer. Very important. Okay? Quasi hammer, shift bar back, hit the stops, doji, back up, pins to the top, reverse off. Okay, this is kind of a hammer, but the body's too big. In, out, where the second stick doesn't pass the first, and you have the highest set, 0, 1, 2, 3, 4. Excuse me, lost sound for a second. I had to sneeze. 4, 5, right? 0, 1, 2, 3, 4, 5. Hour and 15 minutes. The dealer works the area and gets the hell out of there. He actually retests the high in 1 bar. All this is out. All this area is out. And notice that he closed below the blue tracer on that last shift, right? Look. Above the tracer, below, above, below the tracer. He grabbed all the orders and pendings and got them. Okay? Some people wait for it to break and pull back, and they go, if it breaks again, I'll get it. That's where the M comes in. If it breaks again, I'll grab it. Okay, well, you grabbed it, and then he took it away. The dealer giveth, and the dealer taketh away. All right, look. Same type of thing. Doji type candle, below the low and back above. The dealer works it and gets out of there. This is a trap spike to the low. Looks like a tack or a coffin nail. All right, again, pins to the blue tracer. Pins to the blue tracer. Ends on a hammer. Look at these 3 hammers back to back. It's pretty cool. Pins above, back below. Taps, above, back below. Shift the zone, goodbye. These are the things. If this happens if this candle comes in at 3:45 as the high of the day, and then at 4 o'clock, 4:15, 4:30, he issues the hammer. You're well into the session. Take a short position on the close of the hammer. 45 minutes this was worked, and then he shifts the zone away. That's a confirmed entry when it falls below the mustard and ketchup, but this is a damn good entry because look at your stop's going to be. Stop's going to be right there. Okay? And I will cover stop losses tomorrow. All right, is everybody still with me? Good? Sleeping, hanging out? Echo. Everybody left? The only one in here? All right, man. Checking you guys. Thanks, Reese. All right, Ray. See you guys hanging. All right, Joe. Thanks, buddy. Okay, look. Check this out. Evening star formation where the star pattern is a hammer, where the doji is a hammer, right? It's not really an evening star formation, but what it essentially is a break above, a pivot level. The dealer goes in there, fakes it, goes all the way up green with this hammer, and then says, you know what, I was just kidding, and drops back in. And this is the better entry here, but if you're understanding where you are in the cycle and what you got, that's not a bad entry. And that this entry takes more patience and understanding of the whole structure to take it. This is a better entry because this is up, hang out for 15 minutes, and back down. I'm really sorry about the audio tonight. Some of you say you're struggling. Sorry. Really sorry about it. All right. Again, dealer breaks the pins below the low, closes back above, gets above in 45 minutes. Okay, outside structure to the low. This is a beautiful news release where the dealer went down there, exactly the candle I drew for you earlier, and came right back up and never penetrated the level. Outside structure to the low where the dealer has cleared the board on the right-hand side, stops below, right? The dealer has cleared the board right here. It's clear. He's not coming back in that area. It's a half a Batman outside structure, and then the price will rise. All right, I got to make this. All right, news release to the high. Trap move, pulls back. That is a stop hunt gotcha candle. The dealer, second leg in here, but because this was such a high spike, the dealer has went in, cleared the board to the outside. Anything above here, orders above here are stopped, triggered, and absorbed, and then he reverses out. There's a hammer. There's a hammery type thing. See? Wrong directional hammer. Right? That would normally people go, oh, hammer comes in, it goes back up. No. The high of the day is the barometer that everything's measured against. The high of the day and the low of the day is the barometer that everything is measured against. If the high is established, then what happens? The dealer pulls off that high. You look for retesting of the high, half a Batman, outside structure type patterns, extended consolidation, and you fade that move. And fade means to drop here. Okay? Again, Asian range consolidation. That's kind of cool how we started the day on railroad tracks. A break towards the mayonnaise, ends on a hammer, shifts the zone, lights out, baby. All right, again, 4 hour. The dealer breaks above. These are nice railroad tracks. They're almost equal in length. This one's a little bigger. Doesn't matter. This could have had the pin on it. Just imagine what's going on here. The dealer reached up there, grabbed the orders, and came right back below and corrected big. It's essentially, if you can imagine railroad tracks and broken into, if you looked at railroad tracks in a 5-minute chart, it would be this. Boom, boom. It would be an M. This is essentially an M pattern. Okay? You guys got it? All right. We're almost ready for a break, and then Jim's going to come in. All right. Here's another Mona Lisa. Railroad tracks top side. Comes out. This trade has structure. 53 pip. Remember I told you if it's slightly broken? 53 pip Asian range. We reevaluate the last quarter or 1/3 of that range. This looks like a tight range. In actuality, this range would be 25 pips. Take it from the open, top of the open right here. Cut that in half. It's about a 25 pip range. The dealer breaks high in 3 moves. He breaks the Asian number 1. Let me clean it off so you can see. Okay, he breaks the Asian number 1, 2, 3 to the high, ADR is met. He railroad tracks off of that high, shifts the zone, and penetrates back through all the averages and fires that crossover signal on the open of the next bar. I don't want to say you're late to the party on that, but you're late to the party on that, all right? A good entry is here. He gives you no other opportunity to make a good, clean entry, and then you have level 1, hit the stops, drop, level 2. Notice pins bottom, pins top. The pins are bidirectional. Hit the stops, drop. Pins are bidirectional. Pins turn to a unidirectional side as a trap, and the dealer's anticipated move is here to end. Okay? And this end is about middle of the range. This was a huge run day on, I want to say, pound dollar. All right, see it? All right, so understand that the prevailing theory out there gets you to chase the stop hunt, perhaps run a fib extension or an ABC projection, maybe take a breakout or two. That's the old you. You're turning over a new leaf. It's the new you. Okay? These are market myths and will always lead to your failure in the business. They will slowly erode your equity, but because you may get some right, you'll refill your account with your hard-earned money. Remember, as part of that trend cycle, you'll get some right. Day 2, day 3, trend acceleration, put on the brakes and kill you guys. Okay? All right. One of my favorite setups. AB equals, oh crap, top side move. People projecting out here. And it makes the perfect pattern for us. All right, Mosh, you're right. Okay, how about a fib retracement? Not. All right, you go, oh, it goes down here. You don't understand the bigger picture, the peak formation, the stop hunt high, continuation drop, and you think, oh, I'll take the fibs and it'll come back over here. You don't understand, or you didn't know before that you're in level 1 consolidation, and the only move is to the downside. Or the dealer holds the level for a day and a half and works the crosses. The things that you are privy to now that you understand. Okay? All right, so I went through them kind of quick. Some of you have been around before. But what I want you to do is make a list of the reversal patterns. Just name them all real quick. Like outside structure, high, low, Batman, inverted Batman, blah, blah, blah. Write them down real quick. There's a few of them, and then we'll look at them. We'll take a break. And then I'll turn it over to the myth, the man, the legend, Jim. All right, write them down. Thanks, Abe. Yes, I am taking those. I'm taking emergency, Zycam. And I'm doing everything I can to be able to deliver a good product one more time tomorrow. And I guess while I'm waiting for you to write these down, I guess we can talk for a minute. My boot camp starts January 7th next year. And we will have a DMR meeting, I think, on Wednesday after New Year's. I think it's like the 2nd or 3rd. I'm not sure, that night, 7 o'clock. Everyone's welcome. I'm going to open the doors for everyone to come in and have a meeting. We're going to have a, I don't know, an open door chat room or something. We're going to figure it out. We're going to talk, hang out with everybody, and figure out the steps that we're going to take things in for next year. If you're struggling, next year is your year. If you promise me to roll up your sleeves and do the work, this time next year, you'll have money. And that's it. Okay. All right, you should have the answers. Here they are. All right, you should have got half a Batman, upside down half a Batman, or inverted. No, the meeting is for everybody. The meeting on January 3rd is going to be for everybody. I'm going to talk about everything that's going on, clear some things up, and take some questions and surveys about new direction and where we need to go, what we need to do as a team. All right, evening star, morning star. Remember the extra 15 minutes hold. Spike